Hello, investors. This is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Sunday, September 15th, 1:21 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup, or this weekend's Revere Roundup weekend walkthrough. So it was quite the eventful week. Let's go over the trend gauge real quick, and then we'll jump right into it. Everything's green now after the close of last week. Market leaders seen momentum following through, breaking out. So we give it a bullish uptrend. Short term, medium term, and long term, all above the 21, 50, and 200-day moving averages. So those are all bullish green up arrows. So what happened this week? Let's start off with S&P 500 as usual. We came into this week, so this was Friday, Thursday, Wednesday, Tuesday, Monday. We came into this week with that huge distribution day, breaking 8, 21, and 50-day key moving averages. And the market was looking quite dire at that point, and it looked like it was almost quote unquote inevitable that we're going to retest these lows down here. But this continues to reiterate a really important lesson in the markets that anything can happen, and that oftentimes what you think will definitely happen often won't happen. And so it is really critical to stay flexible and bend with the markets as we do at Revere. And we're constantly analyzing the markets from the 3 time frames we talk about, as well as the market leaders, and dialing it back, tuning it forward, just always bring up exposure, bring down exposure, and adjusting with the market's temperature accordingly. So S&P 500, again, started off the week with a huge down day, put in a couple 2 tight days within. Then this day, we released CPI. Looked like we were breaking down, but the bulls stepped up near these lows here of September 6th, and we saw a huge bullish engulfing candle on volume, power of 3 as well, breaking above at 821 and 50. And that's where we really started to re-engage with the markets. And so far, we've had 2 days of follow through, and now heading back into this 56, 70 supply area. With 5 days up in a row, it would be really great to see some back and fill action. Just put a tight little handle to complete this VCP and then take out and head into all-time highs. RSP, extremely great action as well, was stronger than the market cap weighted S&P, held the 50-day, put in a huge bullish bullish reversal hammer, and now we're following through and we're almost making new all-time highs as well. NASDAQ was the weaker one, but also reclaimed some key levels, all moving averages, and this bearish engulfing high as well. And that the S&P 500 did that too. We reclaimed that high. And I consider that a critical high because that was the day after FOMC where got some weak manufacturing data, and it's just caused recessionary fears. And this week we saw CPI, PPI, the core versions of them, tick up a little bit higher. So it seems like the market's liking that. It's painting a potential Goldilocks scenario where inflation is coming down, but the economy is not weakening too much. The Dow almost closed that new all-time high, just great action. Mid caps sprung into life, pulled out to 200, hammer, 2 days follow through, and power of 3 as well, back above the 821 and 50 and this 3,000 level, great action as well. Russell engaging as well, hammer, pretty much off a 200-day moving average and 2 days of follow through, as well as power, essentially power of 3, reclaiming all key moving averages. And that's one thing I will note too. Interest rate sensitive names are definitely acting really well. We'll go over home builder, ITB, and XBI charts later too. VIX, it's great to see the VIX come down below 20. That's usually correctional warning territory in terms of volatility. Above 30 is more bear market warning. Now I want to see the VIX get back below the 200-day moving average, back below 15. If you can just calm down and settle in that 11 to 13 range, that could present a really nice low volatility trend upward. The dollar continues to come down with yields coming down, with some indications of a weakening economy and maybe some recession fears. But as of now, the markets are acting extremely strong. And since equities are a discounting mechanism, so far we are not pricing in a recession. Gold, new all-time highs, just extraordinary action, super strong. Gold miners, which we got involved in, new 52-week highs as well. Silver sprung out back into life. We undercut these 26 lows, but we reclaimed it so far. Above 29 would be like the double bottom breakout, if you want to consider this a double bottom. It's actually more just sideways consolidation. And above this 29.56 area, and silver is also off to the races and will join gold as well. Bitcoin, still holding the lows of the base, starting to perk up here, reclaiming 8 and 21 EMAs, as well as the 50. Bonds just continuing to trend higher as yields come down. The markets are pricing in that the Fed's going to cut rates. There are also some signs that the economy is weakening. So the 10-year, as well as the other, as well as short rates are coming down as well. And that is what is causing bonds to get bid up. TLT, same thing with the BND, trending up, making new 52-week highs. And then of course, the yields are inverse. So that's this is the 30-year, and this is the 10-year. All right, so quickly go into breadth. Talk about the Pradeep Market Monitor. We are back as of 9/11 on green territory, which means more stocks are up 25% plus in a quarter versus down. And that is a great indicator that it is an environment for buying strength. This is a secondary indicator here. Number of stocks up 25% in a month. And then we've seen some breadth thrust as well with this 312 figure and this 476 figure of stocks up 4% plus in a day. You can see summary of stocks with new highs and lows. Just net highs across the board now. So that is exactly what we want to see. On Friday, again, you see up-down volume, highly in favor of up volume, 86% advancing stocks in the NYSE and 74% advancing stocks in NASDAQ and net highs as well. Just another picture of net highs, some explosion in the New York Stock Exchange net highs. Same with the CompQ or the NASDAQ. The NYSE hooks up as well, RSI as well. And let's see this get back above that 10-day moving average. Continue on, the NASI hook up as well. Let's get that back above the 10-day moving average as well. RSI is curling too. So a lot of signs and alignments pointing to potential higher prices in individual stocks, indexes, in various sectors. Percentage of stocks above key moving averages, nothing too notable here. We found support. For the NASDAQ though, I do want to see percentage of stocks above the 200-day, get back above 50 and really clear these highs to have that breadth expansion. In terms of sentiment, we went back into the fear last week, and now we're back in the neutral. So it is constructive to see sentiment cooling down a bit after the prior week's pullback. So now it can give us potentially more room since the market has cleared out some excess and has calm positioning down a bit in terms of crowdedness. So now let's see what we have going forward. AAII bullish readings came down from 50 as well, almost back to historical averages. And then bearish readings back to exactly historical averages, which is exactly what we want to see. We don't want to see complacency if we want the market to head higher. We want a healthy level of fear as the market, as they say, climbs the wall of worry. NAM numbers also came down back to 72. That's still in the more elevated range, but still healthy to see that come down with stocks and indexes acting well. And as of now, there's a 50% probability that the Fed stocks are pricing in a 50 basis point rate cut this coming Wednesday, as well as a 50 basis point rate cut, 25 basis point rate cut this coming Wednesday. And I'll get the sectors and stocks after this part since we're already talking about the Fed. Economic calendar, of course, the main thing is Wednesday, September 18th, 2 p.m. is the FOMC interest rate decision. This is a widely anticipated one where the markets are pricing in at least a 25 basis point rate cut. And then Powell speaks at 2:30 afterwards. On the earnings front, really not much going on this week. FedEx, Lennar give us a sense of how the economy is doing in terms of shipping, home builders, but that's pretty much it here. Nothing too notable. All right, so that's breadth, economic calendar, and earnings. I shall go into MarketSmith breadth real quick, as I do like these indicators as well. The GMIAB is The NASDAQ one, as you can see, advanced decline line has broken back above the 10-day moving average, which is a good sign. New York Stock Exchange has continued to be trending higher highs and higher lows, breaking to new highs and back above the 10-day moving average. Daily market indicators. We came off this oversold reading or approaching zero, which shows that definitely there's some room to the upside here. 10-day moving average of up volume is above down volume, and we're looking to get those net highs above as well. Onto the New York Stock Exchange, cross that zero level, but still, as you can see, still not even close to those overbought regions, and prices in the indexes are back. At least S&P, Dow, and are back to near all-time highs. NASDAQ is still off a bit, same with small and mid caps, but they are definitely still powerful. 10-day moving average of net highs and lows, widely in the net high territory, so that is great to see. And then 10-day moving average of up volume versus down volume, also crossing back into the positive territory. All right, so I'm going to review just 11 charts of interest of mine. Give me one sec. I'll just sort these in alphabetical order. Let's go with app 11. If you missed this name on this beautiful VCP cup with handle 3 days up in a row, this really exhibits perfect breakout action. This is a perfect setup here. We weren't able to get this one, but we did get many other stocks. It just has everything that we would look for. Triple digits, mid double digits in earnings. Pre-tax margins are expanding significantly as well. So this is essentially like a code 33 where you have strong earnings, sales, and margins. Plus that, you have that VCP base, long weekly base, clean and simple, pivot above these highs, and volume came in with follow-through volume as well. So definitely extended now, but if this puts in a pullback by maybe a retest 100, you can get in that way. So got to stay patient here. As you can see, estimated revenues 2024 is 244%, as well as 29% for 2025. Comp rating 99 as well. So it just really has everything that canceling model we see. CPNG is another one holding up really well, broke out to new 52-week highs. This is not extended now. Since it had 4 days up, maybe it has to back and fill, but if it pushes out, it's definitely still viable. ITB is an area or a sector that is interest rate sensitive, and we're seeing that those areas go. If we looked at IWM, the mid caps, small caps, and now home builders, close that new all-time high. So that is really strong, and we own NIL, the 3x levered one, which is acting extremely well. It's nice to see that instant feedback and get some profits under our belt. Meta is another mega cap with a huge base, clean and simple here above that level right there, which is about this 540 level that I'm keying in on. MSTR, we took a small starter with Bitcoin holding the lows, and this one reclaiming the 8 and 21, just closing back below the 50, but that's another area watching, the 50-day moving average and then the 150 level. And this definitely outperforms Bitcoin when it does get going. NVIDIA, the #1 TML in the market, found support at 100 and its prior base highs, bouncing so far, reclaiming all key moving averages, putting an inside day, maybe another few days, or you can just add above that. Still a little bit short in terms of the pivot, in my opinion, but this could just run up to this 130 level, maybe pull something like that, and then break out from there. And that's definitely viable if that scenario happens. ONON is one I've talked about on the podcast, broke out while the market started coming in. This held the breakout, and now when the pressure is lifted off the markets, it's exploded to new 52-week highs. Shark Ninja is one that's extended, but after this earnings gap, it has trended so well, as you can see, unaffected by the market correction, which means this is just a true leader. 98 RS, RS line confirms in new highs as well. Here, though, really have to look for a new base, a new consolidation, but definitely one to keep on your watch list. I mean, at my house, we own some Shark Ninjas. I know a lot of people enjoy their appliances as well, and their ice cream maker is catching fire in terms of popularity too. Tesla is one we were watching, definitely lower RS, but still a mega cap, and they have their robo-taxi event coming up. It is building a nice, clean and simple base here with a gap fill to around this 246 area. So if we can break 235, this high, I would expect us to fill this gap quite quickly into this 250 area. And then we really meet more supply in this 270 area. Then finally, 300 is the big one. If we go on the weekly chart, this has been just consolidating for the better part of 3 years. So if they can surprise on earnings and break out of this 300 area, we could be off to another uptrend for Tesla. And it all depends on if they beat revenues, they beat their expectations. That's how earnings cycles work. Wingstop, building a nice, clean, and simple base. It could be viable with the starter over 410, and then you can add more over 431. And finally, XPI is another sector interest rate sensitive that's doing really well. Power reclaimed 821 and 50. The really key level is now this 103.08 level. And biotechs are acting extremely well. Let's look at a couple components that saw some data that are acting well. SMMT, 40, pretty much 5 days up in a row, up 100% off their data. Turn is another one. No, sorry, not Turn. TVTX is another one that's acting extremely well post breakout. And there are a plethora of other biotech stocks acting extremely strong. And we like to play XBI or LabU, the 3X, to still get that velocity move and that quick potential nature of biotechs to provide profits, but not have that single stock risk, because biotechs are always subject to new data releases, FDA approvals, PDUFA dates, and just some miscellaneous, like other exogenous factors that can cause you to wake up down 20 to 50%. And you don't really want that. And we're always here to manage risk first before thinking about the gains. So that's just some of my thoughts from last week into this weekend. We'll have to see what FOMC brings next week. It's all about the reaction. Remember that. You can listen to all the talking heads you want. Whatever Powell says kind of matters, but at the end of the day, it's the reaction that matters most. So this is going to wrap it. My name is Ted. I'm Associate Portfolio Manager here. My email is ted@revereasset.com, and you can also reach out to Dan and Don at revereasset.com. Our phone is 855-REAL-WEALTH. That's 855-732-5932. We named our flagship portfolio GROTECTION, and that comes with the dual mandate of growing assets in uptrends and protecting them when we're heading into a correction or a downtrend. If you're interested in becoming a client, please reach out, and we'd be happy to take care of you, do a free portfolio review, or even just talk to you about your needs. And with that said, I'll wrap up this weekend's video. It is Sunday, September 15th. This is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening. Have a great week. Have a great, good luck in your trading if you do trade. FOMC is this week as well, and we'll see you guys next weekend.